As the trade war continues, investors are seeking safe havens, and cryptocurrencies like Bitcoin may be one of them. But what are the implications of this ongoing trade battle for investors, miners, and crypto's long-term potential? The recent tariff announcements by the Trump administration have sparked fears of inflation. This could keep the Fed from cutting rates and put downward pressure on non-interest-bearing assets such as Bitcoin. Short-term volatility. The short-term volatility in crypto markets can be a challenge for investors. The price of Bitcoin is influenced by many factors, including market sentiment and investor confidence. High volatility can cause losses for traders and even trigger panic selling. While higher volatility can be beneficial for certain types of investors, it can also derail longer-term trends. This is why it is important to understand the factors that drive Bitcoin prices before investing. The recent tariff announcements have introduced a new level of uncertainty into the global economy. This has sparked risk aversion and led to an increase in demand for safe haven assets. As a result, cryptocurrency prices have fallen significantly. In the case of Bitcoin, it has dropped below $100,000, its lowest level since January. The decline is a reflection of the negative impact that a trade war could have on the world economy. Investors are worried that the imposition of new tariffs will lead to inflationary pressures. These fears may lead the Federal Reserve to become more hawkish in raising interest rates, which will push down demand for riskier assets like cryptocurrencies. Furthermore, increased tariffs will raise the costs of imports, which could exacerbate inflationary pressures and make consumers pay more for their daily needs. Despite these short-term headwinds, the long-term potential of Bitcoin is still positive. The tariffs are designed to weaken the US dollar in international markets, which will make it more attractive to investors in other currencies. Additionally, the tariffs will compel foreign nations to adopt aggressive monetary policy in an attempt to counteract economic slowdowns. This will ultimately devalue their currencies, which will drive citizens toward Bitcoin as an alternative store of value. Bitcoin's uncorrelated performance with traditional markets also makes it a good investment in times of economic uncertainty. In a worst-case scenario, stocks may fall, but Bitcoin could still rise as investors seek refuge in digital assets. This will help to cushion the blow of a trade war and protect investors' portfolios. This is a major reason why many investors are drawn to Bitcoin. Long-term stability. As market volatility and investor sentiment continue to fluctuate, crypto investors will need to stay focused on the long term. Though Bitcoin prices have fallen this week in response to the new US tariffs on Canada, Mexico, and China, crypto may emerge stronger in the long run as a result of ongoing trade tensions. This is because the decentralized nature of the coin allows it to function outside traditional financial systems, which makes it a popular safe haven during times of economic stress. As such, cryptocurrencies could thrive in the event of a trade war because they offer a way for businesses and individuals to invest without being tied down by traditional banking restrictions. In addition, they can help reduce the effects of inflation, which tends to cause other investment assets to lose value. However, as the broader economy recovers from the effects of new tariffs and interest rates rise, Bitcoin will likely lose its appeal as a safe haven. Rising rates will make it harder for investors to afford the cryptocurrency, and they may be more interested in other assets that have a higher yield. Furthermore, the increasing cost of importing goods from foreign countries could also lead to higher inflation, which would also depress Bitcoin prices. Nevertheless, if the current trade war escalates and leads to a global recession, Bitcoin will remain a valuable investment for both individual investors and institutions. This is because the decentralized nature of Bitcoin means that it can act as a currency for international transactions, helping to smooth out the effects of a recession. In addition, the coin has a low correlation with other investments, making it an attractive option for diversification purposes. With the current trade wars creating ripple effects in global markets, investors and miners should keep an eye on market dynamics as they continue to evolve. Cryptocurrencies will continue to evolve in the midst of these trade disputes, and their role as a digital safe haven during economic turmoil remains strong. However, they will need to be more resilient than ever in the future, as the growing number of global conflicts could have significant impacts on their performance and growth. Increased scrutiny. With global markets in a state of uncertainty, traders are seeking safe haven assets. Cryptocurrencies like Bitcoin offer a unique opportunity to fill this role, offering stability against economic turbulence. While cryptos can experience volatility due to trading volumes, regulatory shifts and mining costs, they can also benefit from the heightened attention being paid to them. Cryptos can also play a role in reducing dependence on traditional financial systems by providing users with the means to bypass central authorities and conduct peer-to-peer transactions. Investor sentiment has already shifted as a result of tariffs. Despite a knee-jerk reaction that saw Bitcoin drop to a low of $91,000, the market has since rebounded after a pause in new tariffs was announced. Investors are still worried about inflation and a slowdown in the economy, but they're hopeful that the recent push towards deregulation could lead to a crypto-friendly administration. In addition to the potential benefits of a crypto-friendly Trump administration, investors are optimistic that new legislation will reduce regulation and create a positive environment for cryptocurrency growth. Coinbase, one of the largest crypto exchanges, has recently celebrated a court ruling that could make it easier for crypto firms to work with regulators. The rejection of the CFTC's proposed rule changes is a major win for the crypto industry, and it's likely that similar victories will continue to drive confidence in digital assets as the trade war continues. When a country raises its own tariffs, it can cause price increases that affect both domestic consumers and international trade partners. Higher prices can fuel inflation and devalue currencies, driving both sides toward alternative stores of value. As a result, demand for Bitcoin could rise dramatically. In addition to the impact on demand, trade conflicts can also increase distrust in traditional financial institutions. This may prompt more people to turn to alternative solutions, such as decentralized finance, DeFi. DeFi offers a platform where users can transact directly with each other without relying on an intermediary, making it a valuable solution in a time of increased scrutiny and political turmoil. potential as a safe haven. The recent trade tensions between the US and its major trading partners have shaken markets. Investors have become spooked and are looking for safe haven assets like Bitcoin and other digital currencies. But it's important to remember that cryptocurrencies have more in common with risky assets than safe haven ones. As a result, they often react to market sentiment rather than specific events. In the 48 hours before the new tariffs on Canada and Mexico were scheduled to go into effect, the price of nearly all major cryptocurrencies fell sharply. In some cases, prices dropped more than 25%, and more speculative cryptos suffered even greater losses. While many cryptocurrencies recovered after the tariffs were put on hold, the sell-off was a reminder of just how much volatility and uncertainty can affect the cryptocurrency sector. Adding to that uncertainty, the new tariffs are expected to drive up costs for companies, which could reduce investor appetite for risky assets. This could also impact consumer spending, leading to higher inflation that can weaken the dollar and hurt the stock market. So, it's not surprising that investors have turned to cryptocurrencies in search of protection against rising inflation and interest rates. But it's also worth noting that, when it comes to protecting their portfolios against rising inflation and interest rates, Bitcoin may not be as effective as other investments. This is because it's a decentralized asset that functions outside of traditional financial systems and isn't as tied to the performance of traditional markets. Instead, investors may want to consider stable coins like USDC and USDT as a better option for protecting against inflation. Ultimately, the key for investors is to keep their eyes on the bigger picture when it comes to trade wars and crypto prices. Increasing trade tensions can cause markets to fluctuate, but the long-term outlook for both the crypto and traditional financial markets is positive. By focusing on macroeconomic trends, investors can better predict how their portfolios will react to shifting trade policies. Then, they can make more informed investment decisions. This is why it's so important to have a strong, well-diversified portfolio that includes both fiat and crypto.